Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Welcome to the new week. So during my Asian session live market analysis and the forecast, I'm going to present you the expected market moves or the forecast, Forex forecast for the week 27th February to 3rd of March. So in this week, you come across the month of February gets over and the new month starts. So whenever you come across a month gets over and the new month starts in a particular week, the players are expected to make a very big trend reversal moves. During the trend reversal move, they are expected to make volatile and also whipsaw moves. And part of the game, you will come across the extended stop and move. An unexpected quick drop or a quick rise and reverse within the session or maximum by the next session and continue to gain the levels. That is what you come across as an extended stop and. So you find during that of the trend reversal, such extended stop and is being done most likely in the case of GBP or yen. Today, if you notice, in the case of GBP, they just made a drop from that of 1.2475 to that of 1.2392, started reversing, and they will gain the levels during the session. And also by European session, we should be able to see that GBP goes above that of the high and continue to gain. So if you notice that Euro also made a brief downward stop and then started gaining, and it is in positive net change. USD yen also made the downward stop and below that of 112 and started gaining the level. And in the case of CHF also, it is showing positive net change after a brief downward stop and in the case of Canadian dollar also a brief downward stop and then gain. In Australian dollar also a downward stop and then will gain about 25 pips from the Friday close. So in all you come across that they made a downward move and an extended downward stop and in the case of GBP started gaining the levels. So during this particular trend reversal time, they start with it of the extended stop and in one direction and continue to move the market in another direction. So since the downward move they have shown it in the case of GBP, we'll come across in this week USD weakening move. USD gaining move they have shown it by dropping GBP, and so week beginning false move they just made it as an extended stop and then they are expected to gain the levels during the rest of the days of the week. So we will try to read their intentions from time to time following the forecast derived using the statistical algorithm. So I'll give the session-wise forecast and also the levels in which the currencies are expected to swing as the forecast part of it. Then afterwards, I'll do the market reading in 4 majors and 2 commodity pairs using the initial lows and the highs, which are set in the live market code page. Then I'll also briefly touch upon the trading strategy with which we'll be able to minimize the risk and maximize the profit. My contact details are given here, dr@i-knowindices.com. My Skype chat ID, if you want to contact me directly and chat with me, then iknowindices@hotmail.com is my Skype chat ID. You can contact me. And if you like to know more about the forecast, you can visit my website, iknowindices.com, and then get more interesting information. So first of all, we will see the derived forecast. Then later on, I will do the market reading. Meanwhile, if you have got any question, you kindly ask the question. Suppose as a window, I'll be willing to answer those questions. Now, this is the forecast page. The expected market moves for this particular week. So month end and the new month beginning time, the trend reversal, monthly trend reversal time. So they are expected to make whips or moves or the volatile moves. One of that whips or move is the extended downward stop, and what they had done it in the case of JBB during start of the day, they just made a quick downward extended stop trend from the 1.2475 area and then started gaining slowly the level within the session or maximum by the early part of the next session. They will recover all the dropped levels and continue to gain upward. And that is known as extended stop trend, and we'll be able to see how they are doing it only during the trend reversal time. Then they are expected to make the dip and the rise today, then followed by that of swing and rise. The dip was very brief, indicating that they only try to hit the stops and induce some traders to take sell positions, creating the bearish feel, and then started trapping them, and they were expected to make a quick rise and then make some profit booking towards the close of the US session. Then tomorrow they are expected to make the slide as a part of the volatile move and then start rising the levels for the month end. Then on 1st of March, they are expected to make the rise during the Japanese and the US session, and the slide is expected during that of the European session. Then on 2nd of March, they are expected to make the dip and rise, and then swing and slide, and then swing and rise during the US session. Then on Friday, they are expected to make the rise and continue to firm up during the European session, and then slide during the US session. These are all the expected market moves, and from then next week onwards, after the week beginning false move on Monday, they are expected to continue to gain during this coming month. Levels in the case of Euro and GBP, and also USD and USD CHF. As contrarian move. Now the levels in which they are expected to make the swings in the market. From the 1.0550 area, they are expected to gain to 1.09 area. Then from the 1.24 to 1.2750 area, they could gain in the case of GBP. From 112, they could gain the level to 115 area. Then CHF 1 parity could be the low and 1.02 could be the high. Then in the case of Canadian dollar, they could make further downward move after a brief upward move during the early part of the week. Then in the case of Australian dollar, they are expected to slowly gain the levels to the 0.77 and 78 area. So in all, you will come across the dip and then rise, dip and then rise. That sort of moves are expected to be seen. So it is not the question of US dollar weakening or the US dollar gaining. Some currencies will be showing US dollar weakening move, and certain other currencies show US dollar gaining move. As a result, you will come across that US dollar index may not make a significant rise or the drop. So because many of the traders think that US dollar index will indicate that. So the players try to handle it in such a way that such traders also get confused. Now coming to that of the market reading, Euro formed the low 1.0552 and 1.0575 is the high. They are not breached the low or the high. It is in the middle level. And in the case of GBP, 1.2392 is the low, 1.2475 is the high. They are not breached the low or the high. Then in the case of yen, 111.92 is the low, 112.32 is the high. Now it is closer to that of the high, but still they are not breached it. And in the case of CHF, 1.0069 is the low, 1.0090 is the high. They are not breached the low or the high. Then Canadian dollar 1.3098 is the low. They breached and came down to 1.3094 and gained the level. Then 1.3123 is the high that is not being breached. So it indicates that they are expected to make the commodity pairs to start with during that of the sequential trend reversal. They will act on the commodity pairs and their crosses, then followed by that of the N and the N crosses, then the majors, and finally the European crosses. That is how they will handle the currencies in sequence during this particular 5-day of trading. In Australian dollar, 76.63 is the low and 76.90 is the high. They just breached and went up to 77.07 and holding above that of the initial high, 76.90. So now you can understand how they handle the commodity pairs to start with. So it is actually predictable during that of the monthly trend reversal time. They will start with that of the commodities and the commodity pairs the same way they are doing it. So you will be able to understand that we don't require any news or any data release or any such thing to trigger the market. The players do it in a systematic way and they ask us to follow something else. So when you follow something else, we look for some of the major events and wait to take positions in the market. But the players do it systematically and they try to hit the stops of the traders. So normally what happens that when the market is uncertain, many of the traders or predominant of the traders take positions in the commodity crosses. They feel that they are not much affected because of the fundamental and we can follow the technicals and try to trade. So what they do is they pretend as if the market is following technicals and try to show the moves in the commodity and commodity crosses and later on trap them when they make big moves in the case of the majors. So commodity crosses or wherein you come across CAD as well as Australian dollar are component of the ratio. Besides, you come across either Euro or GBP or Yen or CHF or Canadian dollar or among themselves. They can be the other pair in the ratio. In such a situation, when they make the big moves in the case of majors, automatically such commodity pairs reverse in a very big way. So that is what they try to do and try to trap the traders. And the traders will be thinking that the commodities crosses are unaffected because of fundamentals. But when they make big moves in the majors, automatically such commodity crosses are also being influenced by the big volatile moves in the market. So ultimately, what is more important for us is read the intentions of the players. Then you will find, okay, they are going to start with that of the commodity pairs. That is the majors, the commodity currencies like USD, CAD and Australian dollar. And later on, they will handle the respective crosses. So when they handle such crosses, the commodity crosses, then we understand the next they are going to do is big moves in the case of the four majors. Sorry, after commodity pairs, they will be handling the USD and Yen crosses. Then later on, the other three majors, they will try to handle. Then finally, the European crosses by making Euro, GBP and USD variable moves, thereby will come across the differential moves. Now, if you watch carefully, that Euro is showing positive net change, GBP is showing negative net change. Then USD, CHF is showing positive net change, Euro is showing positive net change. So they are making contrarian moves briefly, but more moves in the case of the commodity crosses. Then sequentially they will do such moves in all these currencies. So now if you do the market reading, you find that in the case of Canadian dollar, they just breached the initial low and started gaining the level. Afterwards, they will make an upward stop and then start making the slide. In the case of Australian dollar, they just breached the initial high and then come down a little bit and they are holding around that of the initial high, and they are expected to gain the levels during the day. Now the recommended calls, near that of the low, we can keep a buy limit order and keep the hedge order to limit the risk. And they are expected to make a downward quick move as part of the volatile move during that of the gap time or late sessions or early sessions start of the European session. At that time, we will be able to really take a buy position and keep the hedge order to limit the risk. And once they start gaining the level, we can keep stop at entry and then start trailing the stop in a profit making position. Keep the trailing take profit orders so that we will be able to maximize the profit. It is not sufficient if you try to limit the risk. You should also earn maximum profit from a position what you are committed, which I mean, there you come across the going is good, then you should be able to maximize the profit. And if you trade without a trailing stop, then you might find that you might miss that opportunity of profit booking. So instead, you make a 15 pips trailing stop and also make the take profit as a trailing take profit order. And depending upon the volatility, the stop and the players do it, I mean the brokers do it in your trading platform, can keep either 15 pips or 20 pips trailing stop in a profit making position and also trailing take profit order above that of the market. Thereby when they just gain, your trailing stops will just move, and once they reverse, they will hit either the trailing stop or the take profit order. Thereby, you will be able to really maximize the profit almost closer to that of the high set for the day. Try to follow that. Systematic trading will help you a lot in earning money from that of the market, rather than trying to say that I'm a very smart trader, I know how to read the intentions, etc. But unless and otherwise you are highly quick-witted, it is impossible for you to retain the profit. So, because they make the whipsaw move so quickly, and your platform, if you don't place an order beforehand, may not fill in or it may not accept the order. So there are technical difficulties, even though you think that you can simply grab the profit and the platform may say that we will give a definite fill, etc. Whenever they are making the whipsaw moves, the platforms will say simply, sorry, we have to accept the level what we are giving it because the market is having a gap in making an upward move or a downward move. That's what they will say. So you try to keep the order beforehand so that at least they will try to fill it during the trend reversal time. If the equity is very low and you are a conservative trader, then avoid taking positions during that of the trend reversal time. Because trend reversal time, they are known to make, see, you would have seen the last week and all, they are not breached the low or the high in most of the pairs after setting it by 3:30 till 5:30 also they have not been breaching, but now you see that they are already breached the commodity pairs and then they will start making big moves. So already you find GBBs, they made the extended downward stop. And so in such a situation, you have to be very careful trading with that of the hedge order. Now these are all the market timings. Follow the timings that early and the late sessions they handle the majors, and the mid session they handle the crosses. So when you are trading in crosses, choose the mid sessions and try to take position and close it. If you are trading in the majors, then take the position during the early session, and the opposite move they will show it during the late session. You will be able to really book profit. Here is a question. In the late session, when there is a rise, is it good to take position in the next 30 minutes, or should we get in right after the 1.5 hours from the start of the late session? So as far as the late session is concerned, suppose a Japanese session, the late session starts by 6 GMT and gets over by 7:30 GMT. Afterwards, you come across the gap time false move. So if you want to take position during the gap time in the late session, then you have to take around that of 6 GMT or 6 to 6:15 GMT and try to close it by 7:30 GMT or during the gap time or during the early part of the next session. The going is good after keeping stop at entry. And if you are a smart trader, then you will be able to see that they make the opposite move during the gap time. So if they gained the level up to 7:30, then they will make a dip during first 15 minutes of the gap time and then gain the level till 8 GMT, from 7:45 to 8 GMT. Then what will happen, they will again make a dip during that of the early session, 8 to 8:30 GMT, started gaining the levels up to 9:30, and then make variable moves during the gap time in order to handle the process. So if we carefully watch which currency they are making an upward or a downward move, every 30 minutes they will change the trend, so that we can follow carefully and take profit. So only if you look into that of the tick chart or to that of the live market code page, you will be able to really recognize which pair they are handling it, how much of move they are done it. Because if you use the chart, whenever there is a subdued move, the chart will magnify the candles. Whenever big moves happen, the chart reduces the magnification of the candle in order to accommodate all the candles in a big range. So when they make about 5 pips gain, when the chart is magnified, it will look like a big upward spike. So don't look into the candles when they are magnified and become emotional. You always refer to that of the net change. That will indicate, okay, they gained only about 5 pips. It's not a big deal. You can just conclude it that way, so that you will know, you won't become emotional by such triggers, extraneous triggers. The ideal time will be wait for first 30 minutes in the session, and then afterwards try to take the position when they are closer to low and not breach the low. Then you will find that they will start gaining the level during the session. Then during the late session, the last 1.5 hours or last 30 minutes, you can book profit. And that will be more easier for a trader. Okay, after a stop and in the early session, do you suggest that we hold till the late session starts? Yeah, when they make a downward stop, for example, and stop cutting the new low, and then they go above that of the initial low. So we have seen in the case of USD CAD, they made a brief downward 4 pip stop and then gone above that of the initial low, and they are holding it. So definitely they will make an upward stop during that of the late session. So you can take a buy after that of the stop, and once they stop cutting the new low and the market comes above that of the initial low and stays there for 30 minutes, then take a small, take a buy. So if suppose they are holding at this level, you can keep about 5 pips below the buy limit order. Because you know very well, see, in the actual trading platform, they will continue to make the swing. And during that swing, if you keep 5 pips below the limit order, they will give a definite fill, and that would have improved your entry level. Any other question, please? If there is any question, kindly ask me. So coming Fridays, I got some other assignments, so I'll not be able to present the webinar. So I'll come back on Monday, 6th of March, and give the forecast for the next week. Any question? Yeah. Should we mark down? Should we mark down the crosses at 3:30? No. You have to note down only the initial lows and the highs in the case of majors, and track the majors, and that will give you the insight about the crosses. Say, for example, when you are taking euro yen, if you want to take a buy position in the case of euro yen, then what you have to do is wait for the euro to form the low and not breach the low for 30 minutes. Wait for the USD yen to form the low and not breach for the 30 minutes. And euro yen near that of the low, not breach the low for 30 minutes. And once you observe all these three simultaneously for 30 minutes and they stop cutting the low, then keep about 10 pips below that of the current market level, the buy limit order, they will give a fill in the case of process. They will make little volatile move and then keep 50 pips below the hedge order to limit the risk. And once you start gaining the level, try to keep stop at entry and maximize the profit during that of the next mid session. No need to note down the initial lows and the highs in the crosses. So no more questions. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back next Monday and give you the forecast for the next week. Meanwhile, make use of the forecast given it to you and also do the market reading from time to time and try to see that you are able to earn without market fear. Wish you all the best in your trades. See you on next Monday.